Hi viewers, 11th Standard Accountancy, Chapter 13, Illustration, Sum number 6. Abstracts from the trial balance as on 31st March 2016, sundry debtors 52,000, bad debts 1,000. Adjustment. Additional bad debts 2,000 rupees, create 5% provision for bad and doubtful debts. So we are going to pause the adjusting entries and we are going to prepare the final accounts for the given adjustment. Okay, before that, when we are going to find out the adjustment entry, before that we have to look that if we had any previous adjustment entry. Yes, we have adjustment entry for the additional bad debts 2,000 rupees. So first of all we are going to subtract that 2,000 rupees additional bad debts from the sundry debtors. Okay, so sundry debtors, from sundry debtors 52,000 we have to subtract additional bad debts 2,000 rupees. Okay, we will get 50,000. From that 50,000 only we are going to find out 5% for provision for bad and doubtful debts. So we get, after subtracting additional bad debts from the sundry debtors, we will get 50,000. From that 50,000 we have to find the 5% provision for bad and doubtful debts. We will get 2,500. This 2,500 is the provision for bad and doubtful debts. Okay, so now we are going to pause the adjusting entry for the additional bad debts and the provision for bad and doubtful debts 2,500 rupees. Okay, so what is the adjusting entry for bad debts 2,000 rupees? So dated on 31st March 2016, the adjusting entry for the bad debts is bad debts account at 2,000 rupees to sundry debtors account 2,000. Narration is bad debts written off. Now we are going to pass the adjusting entry for the provision for bad and doubtful debts 5%. That 5% means 2,500 rupees. March 31st, profit and loss account at 2,500 rupees to provision for bad and doubtful debts account 2,500 rupees. The narration is provision for bad and doubtful debts created. And each and every adjustment is to be appear 2 times on the final accounts. Okay, so for that, as per the format, the adjustment, this is sundry debtors and bad debts is within the sum. Okay, apart from that sum, the adjustment is out from the sum. Okay, so additional bad debts and create 5% provision for the bad and doubtful debts will be appear 2 times in the final accounts. Okay, so listen carefully. Additional bad debts and provision for bad and doubtful debts, these both are loss of the company, losses for the company, because this additional bad debts and provision for bad and doubtful debts is the irrecoverable receipt. All the losses, bad debts, all the losses and the irrecoverable receipt in indirect expenses is to be debited on the profit and loss account. Okay, so we have to take bad debts within the sum. Bad debts 1,000 rupees is given, bad debts 1,000 rupees is given within the sum. So we have to take that bad debts 1,000 rupees from the sum. So on debit side of the profit and loss account, we have to write 2 bad debts 1,000 rupees in inner amount column. We have to add additional bad debts 2,000 rupees. We will get 3,000 rupees, and again we have to add provision for bad and doubtful debts 2,500 rupees. We will get 5,500 rupees, because we have to add additional bad debts provision for bad and doubtful debts directly with the bad debts. Okay, this and all is to be added directly with the bad debts debit side of the profit and loss account, and on in the second time it will appears on the asset side of the balance sheet. So we have to subtract the additional bad debts 2,000 rupees from the sundry debtors 52,000. We will get 50,000. From the 50,000 we have to minus the provision for bad and doubtful debts 2,500. We will get 47,500 rupees. Listen carefully. As per the format, we have to separate it from the sundry debtors. We have to subtracted bad debts from the sundry debtors. From that answer, we have to subtract provision for bad and doubtful debts. From that answer, again we will get one answer. From that answer only, we have to subtract provision for bad and doubtful debts, additional bad debts, and discount for bad debts, discount on debtors, whatever it is, we have to subtract it separately from the debtors. Okay. So from that, as per the format, we have subtracted separately from the sundry debtors.